Hey traders, welcome to Charts and Coffee. Great to see everyone. Hope everyone's doing great. All right, so let's get to, well, first of all, I'm gonna get that countdown trader link up there for y'all. If you haven't checked that out yet, you're definitely going to want to, especially as we continue to go through this year and focusing really strongly on structure and strategies and price-based patterns. We got into a lot of that yesterday during the Raghee report. We talked about potential 1, 2, 3 price pattern reversal, which are absolutely probably one of the oldest patterns that I studied as a young trader. They're still one of my favorites 3 decades later. And so if you want to check out a little bit about what I'm looking at this week, price patterns, and the schedule for the next 2 months, we've got a pretty busy schedule coming up between DPMRs, upgraded wave and grab. We've got a class coming up on March 4. We got a lot coming up. All right, so I already see tons of questions coming through. Absolutely love it. Let's get into it. Now, I'm sure we'll find our way over to the economic calendar at some point. But again, during the Raghee report, we dove into what we're going to be dealing with, just kind of the Cliff Notes version. Heads up for the Bank of Canada, Wednesday, January 25. And Thursday, we've got core durable goods coming out, new home sales coming out. Pretty busy day. Of course, we're in that blackout period for FOMC, so our calendar will be blissfully FOMC chucklehead free for a little bit. All right, so let's go ahead and get into the questions. First up, Dean, for my futures trading accounts, do I day trade and swing trade from the same account or keep them separate? Separate. I keep them separate for 2 reasons. Initial margin requirements overnight are pretty large for many of the contracts. Now, I say large relative to the initial margins that I was paying in the late 80s and early 90s and even in the mid 90s. Initial margins have continued to creep up. They're not inexpensive. It is not an inexpensive thing to overnight trade futures, which is one of the reasons I think some overnight quote unquote swing trading in futures has been supplanted by day trading futures, which I totally get, because when you think about affordability and bang for your buck, yeah, day trading or short term makes a lot of sense. So separate. I also keep less money in my day trading account because we have that beautiful day trading margin, oftentimes as little as $500 per contract. All right. So yes, and I do the same thing for my options day trading and my options swing trading. And I want to mention something. Futures trading has to be done in a margin account, right? You need the leverage. That's the way it works. But when it comes to options trading, things that I do in the Sector Secrets Mastery, whether that be day trading options and our swing trades, those are done in cash accounts. And yes, 2 separate ones. Great question, Dean. Great way to kick off the week. All right, Praveen, how are you? Good morning. Is it possible to create a scan query in TOS based on the JT Multi for Trend and Momo Color? Praveen, I do not believe in scanning that way. I get asked that a lot. I can appreciate it. I get asked that a lot for the V score, as well as what you're mentioning there. But the reason I don't do it is not to be difficult, I promise you. It's because it simply is not the best way to navigate through the market. Remember, gang, we live and trade a very intensely high concentration weighted, I can't talk this morning, obviously need more coffee. High concentration weighted world. I have looked at V-score scans. I created one once upon a time, and then I looked at what it yielded. It's a mess, gang. Think of it this way, and there's a terrible habit that a lot of traders have developed over the past 30 years. And that is lumping together symbols that have technical similarities. They've got a relationship above or below a certain moving average, or they're getting a certain reading on an indicator rather than what you see here in front of you. Praveen, this is how I scan. This is how I've been scanning for many, many moons. And it's only becoming more effective because the market is only becoming more high concentration weighted. Relative performance relative to the weighting these stocks have by their inclusion in the indices and in these sectors is hands down the best way to scan the market. The idea that I need to scan 3,000 disparate stocks that I sometimes know little to nothing about is frankly a sure path to a lot of disappointment and frustration. So I don't do it. And that's the reason I don't. And by the way, gang, you know that a lot of my tools I share with you all for free. If there was something that worked that well and consistently, believe me, I would have done it at some point through the past 30 years. I don't believe in scanning the broader averages that way. I believe in scanning this way, multi charts, looking at the structure of each symbol and being able to see them together on the same screen. I hope that makes sense. I've toyed around with the idea with um, scanning for the wave and grab to even scanning for V score. And it's just a great big mess. And one thing, but you know what? All is not lost. There is one thing you can do. All right, Rog, I've got this curated list. Can I at least track them somehow within Thinkorswim? Maybe not scan them, but track them absolutely. And I'm going to send through the chat here the way in which you can have a list that you have created on your own and then track really simply in Thinkorswim what their current reading is with classic wave and grab. All right, gang. So thank you for the question, Praveen. And it's a really common one that I get. I do appreciate it. And I hope that clarity makes sense as to, okay, I don't need to scan 3,000 stocks. Why can't I just look at the stocks that are going to very likely be moving together because of the high concentration weighting of this market that we trade here in the 2020s. All right. Hey there, Robert. Good morning. Thoughts on Meta or Nvidia for a short-term bull trade? All right, let's do something here. Meta. So if I talk about short-term, there's really two time frames we can talk about now. One would be short-term on a 5 minute, right? And that's day trading. And I can't set up a day trade at 9:09 in the morning. I got to wait till after the bell, maybe after the clearing period. All right. But what about another view of short term? Not day trading, gang. Not day trading. All right. Let's get the drawing tools out here. We're getting serious now. All right. So let's take a look. On a 5 minute time frame, I am day trading. What on earth does that really mean? It simply means that I'm going to be flat by the end of the day. For me, that's 3:50 p.m. Eastern. All right, I'm going to be flat by the end of the day. That is day trading just for the day. Now, short term opens up the idea of maybe 1, 2, 3, maybe more days. So overnight, this is going to be then an overnight setup. And notice how I've shifted to the 1 hour. Now, some of you might think, Rog, I see the HPMRs over here. Super familiar with that. But what are these? Are these HPMRs? They are, in fact, not. They are the DPMRs running on the 60-minute, the 1 hour chart. So if I want a short-term trade in Meta that is not a day trade, I can look at the 1 hour and say, all right, what's the structure on the 1 hour? Where are my hourly price movement ranges? And this is where the clarity of a 1 hour trend is coming up. I've got my 1 hour trend, and I've got my daily price movement range support zone, as well as this 200 propulsion. Again, that 200 propulsion, remember, is part of the top system, right? That's a tool that many of you probably already have. You may not know what to do with it yet. We'll talk a lot more about that on, let's see, do I have the date here? I know I have, there we go, on February 15. So if you haven't yet penciled that in, you and I, we've got a date, Wednesday. on February 15th. I'm really looking forward to that. You think I could make this fit on a single line, but apparently it'll lose me today. All right. I'm really stoked about that because it's the first time a lot of you are going to get a look at the price movement ranges, the daily price movement ranges. So let's get that on there. I'm having a tough time with the tech here today. There we go. All right. So yeah, that's meta. So those are my zones. By the way, mean reversion to the wave makes a lot of sense on that one on a 1 hour, Robert. What about NVDA? Let's do the same thing. NVDA. All right. Structure. Bottom up, gang. Bottom up. Structure dictates strategy. Strategy dictates the indicators. We definitely have the daily price movement range kicking in, but we could also play a mean reversion, right? We can play a mean reversion into the 34 EMA wave. So again, short term, that's the way that I would look at it. I cannot force a daily time frame to be quote unquote short term necessarily. I think we're far better off looking at 1 hour for short term and then look at 5 minute for day trades. So one thing you could think about is, okay, what are the time frames I'm looking at, and then what do those time frames allow me to do? And that might be a really good way to start to separate different strategies and time horizons, right? Using your chart interval, your time interval, to then map to a more effective time horizon. All right, thanks, Robert. What are my thoughts on JP Morgan and Halliburton? Sure, Furman. Let's jump into that. JP Morgan, Halliburton, and let's see what we have here. Oh, you know what? I forgot to put my clock up today. Let's get that up there. All right, JP Morgan and Halliburton. All right, daily time frame. Thank you for the clarity on the time frame. Love it, Furman. JP Morgan, buy the dip. We can play the mean reversion. So, Rod, when you say buy the dip, what on earth are you talking about? Buy the dip, right? I thought that doesn't work. It doesn't work when people don't know where to look for. Clearly, you do, Furman. Love it. Buy the dip. What's another way of looking at buy the dip? Buy a retracement. What's another way of looking at it? Buy the mean reversion, right? And that's going to be the wave for me, or this Darvis level of automated support plus the 200 propulsion. That's a gorgeous level there, just below 130. Both would be buys. One would be, clearly more conservative if the trend cannot be held by the dynamic support of the wave. But if the wave holds, frankly, like it did last time, we're looking for another move to the upside. But it's definitely a buy, right? Let's always get direction first, right? Get direction first, then get levels second. And if you can automate all of this, you can automate what you're doing, you're going to be far better off. And you notice that's a lot of what we do. So JP Morgan, buy the dip, or that Darvis plus 200 propulsion. Okay, Halliburton. Halliburton is a nice buy the dip opportunity as well. What's it going to look like? Well, this one's a great example of the mean reversion plus a price pattern. Plus a price pattern. I don't use chart patterns, gang. We focus on price patterns. So rather than looking at, trend lines and support and resistance that we subjectively draw on our charts, notice that everything I have here is automated, right? I focus on price patterns, which are usually looking at highs and lows in price, and those highs and lows create a pattern. Much more objective. A price pattern is something you can learn in less than 10 to 15 minutes. Chart patterns usually take years because you're training your eyes to find these subjective lines and levels to draw. So price patterns, and that's a great example of a mean reversion plus the price pattern. I'd be looking for that all over again. It's a little aggro, but we probably saw the price pattern form on the 19th and trigger on the 20th, Furman. So that's another look at a slightly more aggressive version of that price pattern. All right, next up. What are my thoughts? Hey there, Stephen, on pins. Okay, let's go take a look. I can't say I love pins, right? Probably a little bullish, but this is a series of Darvis resistance, possibly the price pattern that I look at, overbought, neutral environment, right? Neutral dictates using a slow stow plus that pattern and the Darvis level. maybe a short, right? I don't know that I love pins, but the setup right now where price is out would be more a short than anything. The other thing is BRY. I'll tell you what, Stephen, I try to avoid stocks under 10 bucks. And only because, not because they can't be traded. It's a whole other strategy. If I'm going to play anything really under 20 to $10, it's really much more about volume. It's actually volume over price. It's actually volume over price. Where size is coming in is far more important. I usually will shy away from stocks under that price level because they can be far more, well, unpredictable because it's is there volume coming in or not. A V score would be a great thing to use on something like BRY. I'd be much more interested in what the V score is doing and where support is. So, well, here you go. Take a look at this VWAP, right? Take a look at that VWAP there. This is still the VWAP that's anchored to the 22nd. I'm going to update that today with the Sector Secrets Mastery folks. And we've updated the V score to the first of this year, first trading day of this year, by the way. All right. Next up, good morning. Boil and cold. Jan, I don't actually trade either one of those, but let me tell you what I do look at, right? When I take a look at, say, boil, that is, sometimes you can work backwards to UNG and work even further backwards to natty gas. If I don't have a setup on NG, I don't have a setup on BOIL, right? So everything's, and this would apply to natural gas, UNG as well. What is happening on the NG, right? What is happening on the NG? And then if I like a setup, maybe this is probably starting to look oversold with either a minor low, you can see the signal, it's already popping up to make us aware of that possibility, or an inside day setup. Now, you mentioned you want to take a look at cold as well. So again, if I'm looking at cold, same idea, right? It's the same idea. I hope that makes sense. I don't want to go to these ultras and 3Xs before I look at the underlying. And that to me is always going to be that futures contract. So if I have it set up on NG, then I could take that, choose your own adventure, over to UNG, over to BOIL. All right. Next up is, let's see, good morning. Hey there, Top Spin. This is the way, absolutely. BTRS. Shell pass. Well, it's a sub 20. So again, I would definitely go with the V score. It's above last year's anchored volume weighted average price. Let's update that, actually. All right. So let's see. Did it not take? Let's try this again. Okay. I want to go with 2023, 0103. So I'm anchoring it to the first trading day of this year. Apply. All right. So remember that when we are in the early stages of the new year, we're going to have that funny little period where the first of the year 2023, or the third of the year 2023, and the third of the year 2022 are going to be looking very different. It doesn't hurt for maybe the first month or two to have both up, but this is our freshest look at the V score and at the anchored VWAP. Be careful on this one, but overall, you do have a trend, right? You do have a trend here. Take a peek. Green over green, right? You do have a trend. And so by the dip, while I would be very cautious, if you can take a look, I would say maybe TradingView might be a cool way to go with this, because if you can find a volume ledge, what if the volume ledge? Look, it's not about price, gang, it's about size. If you can find a volume ledge overlapping with that, which we do seem to have quite a bit of volume there. Let's see. Let me make sure I'm typing this up. BTRS. TRS. We have volume. Yeah, a little bit in this area. So that might be an interesting way to look at Look at this. But take a look at where there's much more volume, right? This is the point of control, 200, 200 propulsion, and then look at that volume ledge. So we want to look at these volume ledges through, again, size, not just price. All right, gang. Thank you as always for being a part of Charts and Coffee. Appreciate the time, appreciate the questions. Absolutely. Thank you, Stacy. Hey, if this is moving the needle, if this kind of sets you for the day, I know it does for me. So thank you. Smash that like button. I'll see you tomorrow. Same time, same station. Be good to each other, gang.